Momentum holds as the benchmark fails to edge into positive territory, with small caps seeing a slight outperformance. IT, metals, real estate stocks see healthy buying, while PSU banks snap previous sessions gains. Durable autos and oil and gas also come under pressure.
Jubilant Foodworks is under pressure despite strong revenue growth as weak same-store sales growth weighs heavy on the sentiment. Domino's India LFL came in at just 0.2%, highlighting demand softness and impact of LPG constraints.
Coaches consumer gains after strong Q4 update with double-digit sales growth and improving volume momentum in the domestic business. Management remains confident of navigating inflation through pricing and efficiency.
The EMS sector is flagging rising supply chain stress amid the West Asia conflict. Sharp cost inflation across key inputs is squeezing margins. The industry is seeking duty cuts and policy support as disruptions begin to hit exports.
TDS surges after securing a 450 crore sourcing contract with a US-based value retailer. Management highlights strong client trust, scalability, and growing digital capabilities as key drivers.
Mid-cap names see traction and strong operational updates for the fourth quarter. Shyam Metallics gains on robust stainless steel growth and better realizations, while Credit Access Grameen is rising on steady loan book expansion. Fino Payments sees sharp disbursement growth, and Galantis Parts reports strong production gains.
Hello and welcome. You're watching Buy Now, Sell Now. I'm with you, Kavita Thaplian, with me, my colleague Ashesha. And the next 1 hour is going to be all about your stock-specific question, where we focus and get you help from our experts who will be joining live. But then before that, let's quickly flash our WhatsApp number on the screen, 8657974571. Send us the name of the stock, the price at which you bought it, and also, the time frame till which you want to hold that particular stock. We will get you a technical as well as fundamental view from our experts. So before we dive in and get you connected with our experts and start talking on the market, let's just get a quick market check. Where definitely the market is very truncated right now after a few days of record sharp gains. We've seen the market being very stagnant. Nifty Auto is definitely leading the losses right now. Almost index-wise, we are looking at 2% down moves. We are also looking at metals, meanwhile gaining almost more than 0.5% slightly. India Mix is around 2% up. We are looking at broader markets also moving in tandem with the major indices, but there is definitely a lot of stock-specific action owing to a lot of Q4 updates that we are seeing in the market. Let's get you specific stocks. IT definitely is emerging as a top sectoral gainer. All constituents are trading mainly in green, and Wipro and HCL Tech definitely are leading this particular momentum so far, with the index almost close to 2% up. PC Jewelers, strong business update. We're looking at an up move of almost 5%. PNGS Reva Diamond is also over 13% on Q4 operational update. Credit Access Grameen over 7% up on strong Q4 updates. Meanwhile, we are looking at metals doing good in today's trade. Hindalco, Vedanta, Jindal Steel also up almost by around 2.5-3% in the trade. But yes, the broader markets are right now trying to hold on while erasing the losses. Small cap specifically is trying to turn in green, and from days low we can see it recovering by almost 150 points out there. But look at PSU banks, not doing good today, almost 1.5% down on the index as well. Whereas if we look at pharma, marginally up, almost 0.25% up even on the index, whereas FMCG, one of the losers today. If you look at the energy pack as well as consumption overall, 2 quarters cut right now on the index that we can see. Healthcare and in fact defense pack, here we can see the trade happening almost flattish on the index level as well. So that's the market so far. But before we move on and get connected with our viewers, let's also get an FNO snapshot. Let's look at FNO 360 powered by 5paisa. Our colleague Sajit Mangat is there with us connected live to give you all the action that's happening in the FNO segment. Sajit, hi. Morning. What's the snapshot in the FNO segment?
Thanks, Kavita, for that. We're seeing some weakness coming in in the last 30 minutes of trade, with the Nifty down nearly 0.5%, and the open interest up nearly 0.21%. Nifty is trading at a premium of nearly 50 points to the spot. Look at what's happening in the bank Nifty. That's weakened further in the last half an hour, is down over 1% at this point in time, and open interest up nearly 0.32%. And the bank Nifty is trading at a premium of 218 to the spot as we speak. Look at the entire snapshot of the bank Nifty. You'll see that yesterday we saw a lot of long positions getting built up. Today a lot of short positions are getting built up. So there's some reversal happening in bank Nifty as we speak. The bank Nifty down nearly 580 points odd. A short build up across the stocks, not just in private sector but also in the public sector banks there. In the Nifty, options series, we are seeing good call writing happening at this point in time. We have 22,900 now emerging as a good resistance, with call writers been very active there, while 22,800 is where we are seeing some put writing happening. But call writing has come up in the last half an hour of trade with a lot of and that's what is pushing the Nifty lower there. So look at the distribution chart of Nifty for the series April 13, and you'll see that 23,000 continues to be a strong resistance for that. There is some build up happening on call here in 22,800 and 22,900, with 22,500 being a support for the Nifty as we speak. In Nifty futures gainers, we have stocks like Vedanta, Prestige and Oil and Gas, and Wipro. All the stocks down, up nearly 2.5 to 3% in today's trade. In futures losers, you have stocks like Jubilant Food down 10%. Force Motor is down, and PG Electro is down in today's trade. Auto being a big weak sector in today's trade. In open interest gainers, you have stocks like Force Motor, where we are seeing short build up. Fintech is seeing some short build up, and Jubilant Food is seeing some short build up 11.6% in terms of open interest in today's trade. There in open interest losers, you have RIL. There's a long unwinding happening at RIL. The open interest down nearly 1.6%. Oil India is seeing some short covering, and Piramal Pharma is seeing some long unwinding. Among the most active stock options, Reliance 1300 April call, 35.7 lakh contracts getting added in Reliance 1300 April call. The stock hovering around 1300 levels there, with the premium down nearly 10.55 at 33.85 as we speak. And in the put side, we have the Jubilant 400 April put, which is more active, 11 rupees up at 14.55. There's a good build up happening at 11.79 lakh contracts there. So a large portion of the contracts getting added today in Jubilant there, but the stock above 409 as we speak. So that's an update. We're seeing some weakness coming in, and as the trade goes along towards the end of the day, you'll see some volatility coming into the Nifty.
Thanks so much for joining us with all those details. But let's get started then. This is a show where we answer all your stock-specific queries, so keep sending them to us. And to answer all your queries, we are now joined by Mr. Lakshmikant Shukla, Technical Analyst, Institutional Research at Yes Securities. And we are also joined by Sonam Srivastava, Founder and Fund Manager at Right Research. Sonam and thank you so much, Lakshmikant, for joining us. But first up, let's get started then. We have a query that has come in on KEC International. The gentleman, Bhagwan from Mumbai, has bought about 100 shares at 788 rupees per share. And he's asking if he can continue holding them for a period of 6 months. So that's the question. Mr. Shukla, this question is for you. 6-month time frame, what will your view be on KEC International?
KC International has been running in the downtrend, but if we look at the structure for last 3 days, it has formed some bottom near the levels of 500. So I think that would be the good stop loss for keeping this stock in the portfolio. And with this support, I think some more upside in toward the levels of 575 to 580 zone. I think that would be the upcoming hurdle. But if it crosses this hurdle, so we could see a fresh momentum in this stock toward the levels of 630 to 650 kind of range. So overall expectation is on the upside till it hold of the levels of 500.
All right, so that's a view coming in KC International. But then we move on to our next WhatsApp question. This is from Mr. Parthanan from Punjab. He's bought 400 shares of Equitas Bank at 62 and 600 shares of PNC Infra at 315. I'm not sure about the time horizon. So let's take a both long-term and a short-term view. Sonam, I'll start with you. What's going to be your take and how is the buy price looking?
So on Equitas, he has bought it at what price?
Plus is at 62.
62.
Yeah.
Yeah, I think see he sort of bought it somewhere around near about the top of the stock. And in this correction you've seen some downtrend in the particular stock. But yeah, I think right now if a solution to the geopolitical crisis comes into place, the banking and finance sector could be interesting. So I would recommend that he sort of holds on to it. Equitas right now, they're seeing some target price revisions for this particular bank. So maybe the earning season might not be that attractive for this particular name. But yeah, I think he should definitely wait down for the recovery, right? And second stock you talked about was PNC Infra. PNC Infra again, has seen a significant sort of correction in the recent times. And even fundamentally, right, I think there is not a lot of upgrades that are happening to this particular stock. But yeah, I think it is at a significantly lower level. So I would ask them to wait for, let's say, a price around 300 when they can find an exit.
Okay, so that's the view coming in on Equitas Small Finance Bank. But we also have Sridhar, who has written to us from Coimbatore. He's having about 50 shares of Vedanta at 673 rupees per share, and Titagar Wagon about 100 shares at 817 rupees per share. It's a short-term question, so this question will be for you, Mr. Shukla. He's asking the time and the rate at which he should exit in these short positions. So Vedanta and Titagar Wagon. What will your view be?
See, both these stock in today's session has given a breakout on the upside. First, I would like to talk about Titagar Railway. So it has given consolidation breakout on the daily chart with the formation of bullish belt hold candlestick pattern. Now it is hovering near its 100-day SMA levels, which is placed around the zone of 715. I think that would be the level to watch it for Titagar. Once it taken out this level, we will see extension of this pullback move toward the levels of 745 to 750. So I think on the short-term basis, he can continue to hold this stock with the stop loss of 655 on the downside and can wait for the breakout toward the levels of 715. And after giving the breakout above 715, it could move higher toward the levels of 750. I think within a week, we could see this kind of range in Titagarh. Now, Vedanta has given falling trend line breakout on the upside with the formation of bullish candle, and prices are still trading above its bullish crossover of 20 and 50 DMA. So for on the short term basis, the chart structure is looking good, and we could see more upside in this stock toward the levels of 755 to 765 kind of range with the stop loss of 685 on the downside. So both the stocks are looking good on short-term time frame of chart.
So both these stocks are looking good. Vedanta, that's one of those stocks that we discussed. Bhagwan is now joining us from Mumbai. He's on the phone line with us. Sir, good morning. Which share, which stock are you holding currently, and what kind of recommendation or advice are you seeking?
Yeah, good morning. Thank you for giving me a chance. Hello?
Yes, we can hear you. Go ahead.
Yeah, this thing is, I wanted to ask you about the Sirma. I want to enter it now. Can I do it now and how long?
And what will your time frame be? Are you looking at it from a short-term perspective or a slightly longer term?
That's what also I'm asking you. How long I should hold it also?
Okay.
Yeah.
Right. So Sirma SGS, that's the company that we're talking about. Mr. Shukla, what will your short-term view be? Technically, how does the stock look at this point in time?
So 3 days back, it has formed hammer kind of pattern after taking support from its 20 and 100-day SMA levels, which is placed around the zone of 765 to 770. I think that would be the good support areas from where I think we could see further upside momentum. Further breakout could be expected once stock trading started trading of the levels of 820, sustaining of the same. It could move higher toward the levels of 855 to 865 kind of range. So overall expectation is on the upside. So he can take long position at the current levels also with the stop loss of 775, and can expect upside move toward the levels of 865 to 870. So I think within a month we could see these kind of upside momentum in this stock.
Okay, so that's the view coming in on Sirma SGS on the technical front. But fundamentally, Sonam, what will your view be for this counter if Mr. Bhagwan is looking from a 3 to 5 year time frame? Do you think it is a fundamentally sound company?
No, definitely. I think this is a very interesting company in the EMS segment, and you're seeing. First of all, the stock has been very robust even despite all the correction. And we talked about, like, before this, you talked about the geopolitical risk on the EMS segment, but the stock definitely has been robust. I think even in terms of earnings this quarter, there's a good expectation coming in for this particular stock. So I would recommend that we can actually hold this particular stock for the longer term, and at slightly subdued levels right now, it might be a good time to sort of accumulate.
Right, so time to accumulate as far as Sirma SGS is concerned. But then let's focus and let's talk about a specific sector. India's electronic industry is seeing some pressure as the West Asia conflict disrupts supply chains, spikes costs and delays exports. Now, sources say companies are now seeking government relief with the fears that higher costs may soon hit consumers. Sumita, our colleague, joins in with exclusive details. Sumita, take it away.
That's right. Electronics industry is raising alarm over impact from West Asia on the industry, and sources say that exports to the United States and Europe, the lead time for that has increased from 45 days to more than 70 days. So there is that kind of delay that's being faced by the industry, according to what sources are telling ET now. At this time, the government is collating inputs on issues that are being faced by the industry and the potential relief that could be granted. So for that, METI has invited representation from industry, and industry states that exports to even non-Gulf markets have come under strain as manufacturers are flagging delay in supplies from foreign suppliers. There's a glut in helium gas supplies being faced. Now, helium gas, remember, is important because it is a gas that's used in the semiconductor industry quite extensively. Its price has gone up by over 100%. Then the industry has also flagged that imported machinery is suffering from weakening of the rupee. The cost burden could be passed on to consumers in the near future, and that perhaps could also lead to the to perhaps the electronics industry slowing down, is what the industry has apprised the government about. In fact, the industry has asked for duty cut on plastic materials, natural gas. They say that duties on these products, including metals, should be brought down to zero, and the relief that's being given by the government as of now is not really adequate. So in terms of cost escalation that the industry is facing, we've been given to understand by sources that consumables like grease and packaging have seen a 45% increase. Raw material prices of semiconductor manufacturing, they have spiked by 25%, while components like chipsets are seeing prices spiking by 15 to 20%. Organic chemicals, epoxy resins, hardeners, they are also seeing price increases of 40 to 70%. Then there's freight costs that have increased by 10%. The cost of plastic resins, well, that has also gone up. Now, it's important to also understand that the Middle East and Gulf countries, they are an important market for India's electronics exports. In fact, the UAE alone accounts for over 4 billion of exports of electronics. Saudi Arabia accounts for $400 million of exports. So, of course, the industry is hoping for some sort of relief package, some sort of relief measures to be undertaken.
Sumita, thanks so much for joining us with all those details. But with that, we need to slip into a very short break. We'll address many more queries on the other side. Don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now, and we are answering your stock-specific questions. Our guests are live with us, Lakshmikant Shukla and Sonam Srivastava, but we also have a live viewer on the phone line. This is Mr. Rakesh Kumar from Nagpur. Rakesh, hi, morning. Thank you so much for sending us your question. Our experts can hear you. Please ask your query.
Ma'am, I am holding REC Limited at 900 quantity at the rate of 390 from last 1 year.
Okay.
What can be the view for next 1 year or so?
Sure. Sonam, can you help him with the analysis?
Definitely. So REC Limited, like you said, you've seen a significant sort of correction from the last 1 year. You're seeing some bounce back, right? If you're looking at the current earning season, there's not like a lot of expectations coming out of this particular stock, but the levels, like you said, are at the bottom, and these are utility companies, especially in the power sector. So you might see some upside. I think our power sector is seeing some traction, and the utility sector, especially during a geopolitical crisis, would be a safe haven. So I would recommend that you can hold on to this particular stock at least till you sort of recover to a level of, let's say, 350 or so. And then I think depending on the again, on the budget allocation, on how the power sector is faring, you can take a decision on whether to exit or hold on in the next year.
Okay, so that's the view coming in on REC, but we also have Suresh Nair, who is joined us on the phone line from Hyderabad. Mr. Nair, good morning. Tell us
Morning.
which stock are you holding?
Yeah, thanks a lot for taking my query. The stock is Kalyan Jewellers. Actually, I bought this stock in the year 2024, end of 2024.
Okay.
So actually, it has gone up to 780 plus. But after that, there was a sharp fall, and I had been holding it. So
Right.
just want to know whether I should hold average or sell the short.
So 502 is your buy price. Am I getting it right?
Yes. Actually, in fact, I had more. I booked profit. I sold off in between. So
And what is your time horizon, Mr. Nair?
I am a long-term investor.
Okay, Sonam, then this question is for you. Kalyan Jewellers, 502 is his purchase price, 416 is where the stock is currently trading. What will your fundamental view be on this company?
No, I would recommend definitely hold on. I think you saw a big move yesterday in the gold sector and the gold finance companies. And I think even on the earnings side, there's a lot of strong expectation coming out from this particular counter. I know that this counter is extremely volatile. There's a lot of ups and downs. We've also had some experience with this particular stock, but right now I think the outlook for this stock is definitely strong. So I would definitely recommend that hold on till you recover. At least your buying price, and I think it could be a good hold for at least for a few quarters.
All right, a good hold for a couple of quarters. That's the recommendation coming in for you on Kalyan Jewellers. But it's time for a short break. Our both experts are live with us. You can keep sending us your questions, and we will be right back after this break. You're watching Buy Now, Sell Now, and we are answering your stock-specific questions. And before we get connected with our viewers, let's just quickly flash our WhatsApp number once again so that you can note it down. And next half an hour, we are going to be focusing on your stock-specific question. 8657974571, the number where you can send across your question. Write the name of the stock, the price at which you bought it, and we will get you a technical as well as fundamental take from our experts. Moving on, let's take a WhatsApp question. This is coming in from Sudha, and she wants to know about Aditya Birla Real Estate. She's at 35% loss, and she wants to buy Data Patterns or Supreme Industries for 3 years. So, okay, let's take a fundamental view first, and then I'll come to you, Mr. Shukla. Sonam, okay, so AB Real Estate, she's in losses. What would be your recommendation?
Yes, I think there's been a significant sort of correction in the real estate segment, right? But I think from these levels, what I would recommend that maybe wait for some recovery, right? Given that you are at an absolute bottom, and I think what we saw yesterday was there was a up move in the consumption segment, right? After there was a speculation about ceasefire. I think you've seen significant pain in this particular counter, but what I would recommend is that again, wait for some up move from the levels where you are. And yeah, I think there might be other sectors where you could focus on. I think she named a couple of other stocks, right? I think data patterns and
Between data patterns and Supreme Industries. So if you're recommending a hold because she's already in pain in AB Real Estate, which of these two can she buy?
yeah, so I think from if you actually want to get out of Aditya Birla real estate and maybe focus on data patterns and Supreme Industry, I don't think that would be a bad idea right now. I think between data patterns and Supreme Industry, I would prefer data patterns at these levels. I think we're seeing a better expectation of the earnings. I think the sector is much more suitable for the current geopolitical scenario. And I think so we would have a higher conviction on data patterns at this present moment. Supreme Industry at these levels would be slightly value buy. You're seeing some movement happen in the plastic goods segment, but I think the global trade is impacted. I think with geopolitics, oil has been impacted. So not seeing a big expectations in the coming quarter for the plastic industry. But yeah, I think data patterns could be a good buy from these levels, right?
So current levels, data pattern is where Sonam is recommending you. So that's the advice coming up for you. We are connected on the phone line with Mr. Kannan from Trichy. Hi, morning.
Hi, good morning, madam. I have accumulated Affle India shares for the last 4 years. I hold 100 shares at an average of 1280.
Okay.
Presently, profit of 10% only, which is very low. Fundamentally a strong company and with a no debt also. My query is, can I accumulate at this place now for long-term investor? And would the Gulf War situation will affect this company's performance?
All right, Sonam, are you looking at a short-term disruption, but maybe a good hold for long-term?
For Affle India?
Yeah.
So I think Affle India is, I would assume, not that impacted. It is more in the digital space. It has B2B, B2C business where it works on mobile advertising. But yes, I think the expectations in terms of earning this for this particular stock are not that strong right now. I think there are disruptions in this space with the AI and that is a concern that is still there. So I don't have a huge conviction in this particular stock. But yeah, again, you've seen significant declines and there is technical bounce back that is coming in this particular stock. So I would again say that maybe wait for levels of, let's say, technically, and I think you're better experts for that, but I would expect at least for 1600 levels before you take a decision here.
Right. Lakshmikant, any view coming in from you on this?
The overall trend is on the downside, and the stock is still facing resistance from its 50 DMA levels, stand around the zone of 1480. Until we see any decisive breakthrough of this level, we will remain slightly negative. However, on the downside, the levels of 1310 to 1300 could be seen as the support. But for moving higher, it needs to give a breakthrough of the levels of 1480 to 1500 zone. Then after, we will see further upside move. Otherwise, we will see some more consolidation on a shorter time frame of chart.
Consolidation in short term, but 1480 and 1500 important levels. Mr. Kannan, are you there on the phone line with me still? Do you want to ask anything else?
Okay, madam, fine.
Okay.
Thank you.
All the best. All the best. Thank you. Let's move on. Let's take a WhatsApp question. This is Mr. Vaman from Hyderabad, and he wants to know, is it the good time to enter Tata Chemicals, Kalyan Jewellers? All right, Lakshmikant, I'll come to you. What's either of them? Which one do you choose, and entry levels also?
So for Kalyan Jewellers, it's quite volatile in quite volatile in nature. And yesterday we have seen a breakout on the upside, but in today's sessions we are also seeing a profit booking coming from the previous swings high. So I think one should wait for the levels of 400 to 405. So that would be the good levels from where one can accumulate Kalyan Jewellers and could see upside move toward the levels of 445 to 450 kind of range with the stop loss of 385 on the downside. For Tata Chemicals, I think is still trading in the negative territory. Even short-term of pullback was not able to create some positive momentum in this stock. So overall sentiment is on the bearish side, and if it closes below the levels of 590 to 600 zone, then we will see further breakdown toward the levels of 575 to 560.
All right. So these are the entry levels recommended for both. Kalyan Jewelers a better bet as compared to Tata Chemicals right now, but then a stop loss of 385 is needed. That one should go for it. I have Mr. Triambaka from Mysuru on the phone line with me. Hi, good. Okay, sorry, it's a WhatsApp question. And he is asking about HDB Financial. He's got 100 shares at 752. And he wants to buy some more, or maybe this should be the time he can average it out for a long-term perspective. All right, Lakshmikant?
See, this stock is running in the downtrend since so long, and after making bottom near the levels of 555, we have seen slight recovery, but still facing a stiff hurdle from its previous swing high, which is placed around the zone of 600 to 620. So until we see any decisive close, weekly close of the levels of 600, we will remain negative, and we could see some more correction toward the levels of 555 to 550.
Okay. Sona, do you have any coverage on this? Would you want to recommend something, or maybe a long-term strategy, or as per long-term fundamentals, it's an exit from you, Sona?
So HDB Financial, I think I definitely like the sector, right? You're seeing a lot of movement on the credit growth side and asset financing side. So I definitely like the sector, but yeah, I think the stock by itself has seen significant correction. If you look at the peers, the stock is sort of struggling in terms of profitability growth and sales growth. But yeah, again, the stock has corrected a significant bit. There's not a very strong expectations of earnings in the next quarter. So maybe after some recovery, it could be a good idea to sort of exit this.
Let's move on. Other WhatsApp question is coming up. It's coming in from Bangalore, Mr. Murlidhar, and he's got 440 shares of KPIT Tech at 698 for a few weeks. That's the time frame he wants to hold it. Lakshmikant, what's going to be your target price if it is a hold for a couple of weeks from you as well?
After prolonged amount of correction, stock has seen recovery. Stock has been witnessing recovery for last 3 to 4 days, and from last 2 days, it has also reclaimed its 20-day SMA levels. So short-term pullback move is expected in this stock toward the levels of 745 to 755 kind of range. For if he is taking long, then he should keep the stop loss around the zone of 670.
All right, 670 should be your stop loss. Okay. There's a question by Mr. Ravi Shankar from Hyderabad, and he wants to know about Keynes Technology, bought 200 shares at 3700, and the advice he needs is only for 2 months. Lakshmikant.
Can you repeat your stock?
Keynes Technology.
Okay.
Yeah.
Okay. So Keynes has seen Keynes has formed a base formation near the zone of 3,380 to 3,3400 zone, and a day before yesterday we have seen a pullback move in this stock, and yesterday we have seen follow through buying momentum. Overall expectation is on the bullish side. Immediate resistance stand around the levels of 3,780. I think once it crosses this level, then the buying momentum will accelerate toward the levels of 4,100 to 4,200 zone. So yes, he could go for the buy with the stop loss of 3,460 on the downside, and can expect this breakout of the levels of 3,800, and could wait for the target of around 4,100 to 4,200 zone.
Okay, so that's the view coming in on Keynes Technology. Next question is from Mr. Sriram Raghuraman from Chennai, bought 25 shares of Granules India at 294. Need fundamental view if he can add more. Sonam.
So the stock you named is Rallis India, right?
Granules.
Granules.
Yeah.
Okay, understood. So Granules India, again, on the pharma sector, we've seen some movement recently. due to the announcements. The stock has definitely picked up some momentum in the recent times, but again, the expectations coming in for the next quarter on the earnings are not that strong for this particular stock. I think it would be a good hold at these levels. I think pharma sector even today is looking decent, and I think might not be a bad idea to hold on, because this company is not not involved in the branded product. It is mostly on the ingredients on formulations, and that is not impacted by the tariffs as of yet. So I would recommend that they can definitely hold on to this particular stock.
He can hold on. The buying price is actually 294, so he's definitely in profit. So it's a hold for you if in case you don't need the money right now. But with that, it's time for a short break. Post that, we'll enter the last leg of the show where you can still get connected and ask your questions. So the WhatsApp number is flashing on the screen. Send across your queries. Welcome back, and now let's move on to an important news. Air India is in turmoil. Reports say CEO Campbell Wilson has resigned, though ET Now couldn't independently verify it. The airline continues to grapple with losses, regulatory scrutiny, and safety issues. Sumita joins in with more details. Sumita.
That's right. It could be an important development if confirmed. This is essentially what reports are suggesting. ET Now could not independently verify this development, but reports suggest that Air India CEO Campbell Wilson has resigned. Remember, this is coming in even as the airline has been facing losses, persistent losses, and increased regulatory scrutiny. And that scrutiny has increased, especially after Boeing's plane crash last year, which killed at least 250 people. And after that, we've seen a whole lot of controversy as far as Air India is concerned. Many are asking for accountability. And overall, the airline has been grappling with multiple pain points. This accident was just one such incident. In fact, regulators have flagged issues ranging from flying aircraft without emergency equipment. There have been delays. There have been delays in replacing engine parts as well. So all of these have been flagged. And surely the Tata Group has not been very happy about the airline's performance. And of course, reports did suggest that they were looking out for a new CEO. Now, as far as Campbell Wilson is concerned, well, he was appointed as CEO and Managing Director of Air India in 2022. He has over 30 years of experience in the aviation industry, and he's worked across both full service and low-cost carriers. Now, Wilson's term was expected to conclude in July 2027. So if this confirmation is confirmed by the company, then this is going to be a major development at the company, given the fact that he ends his term a year before he was to complete his term.
All right. Thank you so much, Sumita, for all those details. And that's a development story we're keeping track on. But then let's move on. And the next WhatsApp question is coming in from Ahmedabad. This is Tushar Shah. He bought LMW 195 shares at 6,800 since 2018, and he can hold it for more 2 years. Sonam, is it on your radar?
What is the stock?
LMW.
LMW.
Right.
Okay. So let me have a so I think that I like the sector definitely in the machinery manufacturer, but the textile angle, you're seeing some stress over there due to the tariff situation. The stock definitely has gone through correction. You saw a rebound in the last couple of days. The expectations, I think, in terms of earnings for this particular stock also are not that strong in the upcoming quarters. So what I would recommend is that maybe wait for some recovery from these levels, and then might be a better idea to move into other industrial manufacturing stocks, possibly in the auto ancillary segment or other capital goods space.
Okay. Let's move on, and that's the advice on LMW. But the next question is coming in from Mr. R.K. Ahuja. He wants an entry point on Ember, Dixon, Keynes, and Trent for long term. Lakshmikant, I'll come to you. Let's start with Dixon.
So I think Dixon is consolidating at its lower level. If he's asking for the entry point, I think we could expect consolidation breakout of the levels of 10,570 from where it could gain strength toward the levels of 11,400. So that would be the first line of resistance, and if it surpasses this, then we could expect 13,000 levels from Dixon.
Okay, so that's the advice on Dixon Tech. Amber?
Amber, I think he has to wait for a few days because stock is facing a hurdle from its lower level. Still, it is not able to surpass its 20 and 50 DSMA levels, and I think he could wait for a few weeks. I think then after we could see upside breakout in this stock. Breakout levels is seen around the zone of 6,820 to 850. So that would be the breakout levels for the Amber. However, on the downside, the stock is hovering near 100-day SMA. So if it breaks the levels of 16,100, then we could see further weakness, which could drag it down lower toward the levels of 5,800.
Okay. Buy price in Trent and Keynes Technology also?
So Trent has seen a good recovery from the lower levels, and in a steady session, it has reclaimed its 200 SMA with the formation of bullish belt hold candlestick pattern. So some more upside is expected in the trend toward the levels of 3,990, and he can buy from the current levels also, as the stock started trading about 50-day SMA levels. So next resistance is seen around the levels of 3,990 to 4,000 zone, and on sustaining of the same, it could move higher toward the levels of 4,300. And for Keynes, so as I said, it has formed a strong base at lower level, and from last few days, it has been hovering above its key moving average of 20 and 50 decimal levels. So we could expect breakout above the levels of 3,780. Once it crosses this level, then we could see positive momentum in this stock, which could push it higher toward the levels of 4,100 to 4,200 zone.
Right, so here we cover all your four stocks, Mr. Ahuja. Let's take Nikhil Sharma's question. And so he's got 35 shares of Zensar Tech at 862, and he says the predicted target is 965, but then he wants to know if he can book the loss and exit the stock or hold it. And he also wants to know the right time to buy EV sector stocks, Electra or JBM Auto. If yes, what's going to be the buy price? So let me start with the fundamental aspect of the question. Sonam, I'll come to you first. Zensar.
Yeah, so Zensar Technology, I would definitely not recommend him to sell at these levels. You're seeing some drawdown happen in this particular stock, and we know that the digital services have been under stress, but I think definitely is a very interesting stock. We are expecting a good quarter. You have seen some rebound in this particular stock. So, I would recommend that Zensar Tech definitely could be a hold from these levels. I would not recommend him to exit. I think wait for a quarter or so before you decide on this particular stock. In terms of, what he wants to buy, I think he's named Electra and which stock?
Yeah, Electra or JBM Auto?
Electra or JBM Auto. I think, again, interesting names in the auto segment. I think you're seeing some traction happen in the auto segment for sure. So I think both of these could be sort of auto ancillaries and autos could be interesting segments to be. I would like JBM Auto in the manufacturing space as a preference, right?
All right, so JBM Auto. Lakshmikant, what's going to be the entry level or the buy price?
For the JBM Auto, I think we could see a consolidation breakout with the levels of 585. After giving this breakthrough of this level, I think we could see some more momentum in this stock toward the levels of 620. So that would be the upcoming resistance if it surpasses the levels of 585.
Right, so that's a buy price in JBM Auto. And with that, it's a wrap on the show as well. Thank you so much, both of you, for giving us your time and answering our viewers' stock-specific questions. Thank you so much. And with that, it's a wrap on this edition of Buy Now, Sell Now also. But then more on markets coming up. Stay tuned.